U.S. Department of Justice will ask a judge to force Google to sell off its Chrome internet browser. That's according to a report Monday by Bloomberg News, citing people familiar with the plans. The same judge ruled in August that Google illegally monopolized the search market, helped by the dominance of Chrome, which is estimated to control around 2/3 of the market for internet browsers. Bloomberg says the DOJ will also ask the judge to require measures covering artificial intelligence products and Google's Android smartphone operating system. The report said the government has the option to decide whether a Chrome sale is necessary at a later date if some of the other aspects of the remedy create a more competitive market. The DOJ declined to comment, while Google said the department is pushing a, quote, radical agenda that goes far beyond the legal issues in this case. It plans to appeal after the judge's final ruling, which will likely come before August. The move would be one of the most aggressive attempts by the Biden administration to curb what it alleges are big tech monopolies. Ultimately, however, the re-election of Donald Trump to the presidency could have the greatest impact over the case. 2 months before the election, Trump claimed he would prosecute Google for what he perceives as bias against him. But a month later, he questioned whether breaking up the company was a good idea.
Nestlé wants to cut costs by at least $2.8 billion by 2027. The company also said Tuesday it will boost advertising and marketing. It's part of a plan to drive growth under new CEO Laurent Freixe. He took over in September from Mark Schneider, who had upset investors for several quarters with weak sales growth. Nestlé, which owns brands like KitKat and Nescafé, gutted its marketing and advertising budget under Schneider. It also invested less in innovation during the cost-heavy COVID-19 pandemic. The repercussions continue to weigh on the Swiss company's revenue. It was hurt when shoppers switched to cheaper, better advertised or more innovative brands which ate into Nestlé's market share. It forecast medium-term organic sales growth to be more than 4% in a normal operating environment. It also sees an underlying trading operation profit margin of 17%. Nestlé said it will increase investment in advertising and marketing to almost a tenth of total sales by next year to support growth. The firm also aims to carve out its water and premium drinks businesses into a standalone global unit. Shares were down around 1.8% in early trade. Sony is in talks to buy the media powerhouse behind the popular Elden Ring game. Two sources told Reuters of the move for Kadokawa, which comes as Sony looks to add to its entertainment portfolio. They said talks are ongoing and a deal could be signed in the coming weeks if successful. Kadokawa's shares closed up 23% on Tuesday. Neither side would comment on the reported negotiations. Sony already has a 2% stake in Kadokawa. It also has a stake in subsidiary From Software, the developer of the critically acclaimed Elden Ring. The hit fantasy role-playing game is a collaboration between Game of Thrones author George R.R. Martin and veteran game designer Hidetaka Miyazaki. The game has sold 25 million units and an expansion pack shifted 5 million in the 3 days after its release in June. Kadokawa has other franchises including more games, anime, events and figures.
Boeing in a filing Monday said it had sent layoff notices to over 2,500 workers in the states of Washington, Oregon, South Carolina, and Missouri. It's part of the debt-ridden planemaker's plan to trim 17,000 jobs globally, or 10% of its workforce. Those who were let go were mostly engineers, technicians, and non-union workers, the bulk of them in Washington state, where nearly 2,200 workers received notices. Layoffs varied between sections. An engineer in Boeing Defense, Space and Security told Reuters all but 2 or 3 members of his 12-person team were let go. Another said she was the only one in her roughly 20-person team to receive a layoff notice. Both said they provide vital support for production and design engineers. The company told affected workers they will stay on Boeing's payroll until January to comply with the federal 60-day notice period rule. News of cuts in November was widely expected. Boeing had said it started issuing notices last week, and another round is expected in December. The notices come as Boeing aims to restart production of its best-selling 737 MAX jet following a weeks-long strike. Strike! The stoppage ended earlier this month, having crippled much of the firm's airplane output.
Wall Street's main indexes closed mixed on Monday. with the tech-heavy Nasdaq ending higher thanks to another surge in shares of Tesla. The Dow ended slightly lower, the S&P 500 gained about 0.4%, and the Nasdaq added 0.6. Tesla, whose shares have surged roughly 30% since the November 5th election, jumped more than 5.5% Monday, following a Bloomberg report that said members of President-elect Donald Trump's transition team were seeking to ease rules for self-driving cars. Skylar Wynand is Chief Investment Officer at Regan Capital.
You kind of have some haves and have-nots between who was involved in the election, specifically Musk-related stocks and some huge stocks like that. It certainly doesn't hurt that now that Trump is the incoming president and he's really reversed course in terms of his views of EVs, EV credits, what the administrative support might be for electric vehicles. That's all hugely bullish for Tesla.
Meanwhile, investors were also gearing up for Nvidia's third-quarter earnings on Wednesday. The AI chip designer has powered 20% of the S&P 500's return over the past year, and many, including BofA Global Research, are expecting another blowout quarter. Nvidia's shares fell on Monday, however, after a report said its new AI chips were overheating in servers. Among other movers, CVS Health's shares gained more than 5% after the health insurer said it would add 4 new members to its board in an agreement with Glenview Capital Management. With the key holiday shopping season set to begin, results from major retailers this week, including Walmart, Lowe's, and Target, will be closely watched to gauge the strength of the U.S. consumer.